And thank you all for joining us for another episode of the Finance Magnates podcast, a series of interviews about the blockchain sphere. And thank you very much, Adam, for being our guest this time.
Thank you.
And let's get right to it. What's your reason what's the reason for your project, and how does it fit in the current blockchain system?
Sure. So I think that to answer that question, you have to kind of look in general. I think there's a lot of confusion around what blockchain is and what it's good for. So I would say that in today's landscape, basically, well, in general, blockchains are good for, they're good for attaining global consensus about a set of things. And that is expensive. So you don't want to be using blockchains for, let's say doing decentralized Facebook or decentralized Uber or something of that nature. On the other hand, the value in the blockchain is the fact that it's open and that anyone can use it. So this whole idea behind these private blockchains, I think, is also flawed. You really want something that does focus on the correct use cases, which is like basically managing digital property. This, I guess like, Bitcoin, money, financial instruments, that kind of thing. That's what you want to be focused on. And you also want it to be open on a public ledger. And right now, to me, it seems that like you have a lot of projects, a lot of banks that are interested in like private blockchains, and then you have a lot of decentralized blockchains which aren't focused on finance. And I think that this is a good intersection to be at.
Mm-hmm.
Okay, so going more into it, so what we do, I guess, is we're a blockchain focused specifically for finance. We come in with the attitude of saying, listen, Bitcoin is great for, as a monetary instrument, and we don't want to compete with Bitcoin as being money, but rather we'd like to complement it with more features and functionality than it currently has. So right now, the set of predicates under which you can send Bitcoins is limited. What that means is basically the contracting language in Bitcoin is smaller than what would be possible. And also the number of tokens Bitcoin supports is also, it's only one, it's only moving Bitcoin around. What we're saying is the same way with which you own Bitcoins via private key, it would be great if you could own the rest of your wealth and the rest of your assets under that same paradigm. So whether it's your stocks, your bonds, your cash, equities, whatever you want, just hold it in your wallet, secured by private key, and it's yours in your pocket, and no one can stop you from using it, and there's no arbitrary restrictions, etc. So yeah, so basically the way I guess I'd view Zen, the justification for it is saying, okay, if you look at the market cap, let's say 90% or 95% of the market cap should go to being money. That I guess should say in an efficient market go to Bitcoin, and then the rest of the 10% would be in the utility value of other things, and that utility value would be encompassed by perhaps Ethereum or perhaps Zen. We'll see what happens.
So what would you say to people that criticize Bitcoin for its backlog of transactions and high fees? A lot of people are going toward Ethereum or their own blockchains because of that, because there's a what they call a governance problem.
So I think that the initial issue with Bitcoin, I mean, it is a real issue. The way it was set up is that miners or hash power should vote, and right now we have a situation where the distribution of hash power is not what we expected. The development of ASICs resulted in the fact that you have a large concentration of hash power, and it's not a good proxy for basically the opinion of the greater Bitcoin community. And so since the governance mechanism that Bitcoin was planned on failed, now it's like, how do we deal with this? But nevertheless, I think these problems should be fixed. I think if Bitcoin's problems are not fixed, then what we're going to have is a situation where today, let's say today it's Bitcoin, tomorrow it's Ethereum, the next day it's Zen, etc., etc. And there's no one ever trusts cryptocurrency as cryptocurrency. And my mom or my grandma will never put her life savings in it. And I want to reach a point where people say, this decentralized asset, we're going to believe in Bitcoin the same way we believe in gold. And that's why I think that not only is it, I think it's disingenuous to attack Bitcoin for not having these properties. It's a very easy technical fix. The issue here is political, and and we're working through it as a community. And I think that it's the smart thing to do, that you have a large amount of discussion before changing something, before deciding which governance structure are we really going to go ahead with. And yeah, and I think that it's legitimate, and we all need to help Bitcoin, because if Bitcoin fails, all these other projects that are attacking Bitcoin because its transactions aren't fast enough will also fail. That's my approach.
Mm-hmm. But it's like, there's a potential danger, at least, to linking your solution to another, to another, another project which you don't fully control.
No, that is correct. So we're not fully linking. Like, our project can succeed even if Bitcoin were to fail. So we have our own blockchain. It's independent. The only thing that's going on is every block that our miners find, they make a commitment to Bitcoin's UTXO set. What that basically means is that people can provably claim if a transaction on Bitcoin went through. For example, let's say I write a call option, and I write that call option to you. And I say, this call option is only valid if you pay me a premium. You can decide to pay that premium to my Bitcoin address. And then, if, for example, for example, let's say we agree on the terms and you pay the premium to my Bitcoin address, you can use the miner's commitment to the Bitcoin UTXO set in order to prove to the smart contract that you did in fact pay me my premium and that you are entitled to the upside of this option. But if, for example, Bitcoin were to fail for some reason or another, it wouldn't hurt the project. You just couldn't rely on Bitcoin anymore, and we would, keep on doing our own thing. But again, the goal here is that doesn't happen.
Mm-hmm. Okay, so we understand you're keeping an open mind, but you're a Bitcoin guy. So
I'm a pragmatist. Yeah, I'm a pragmatist. I'm just saying that, like, in the long term, not the pump and dump. Today it's going up, tomorrow it's going down. I'm saying in the long term, like, is there any value here if Bitcoin disappears? Will anyone ever trust a decentralized asset, or will it just end up being like, the cryptocurrency that the US government mandates? I see these currencies coming in and, saying, okay, well, we're faster, we're quicker, we're, more private, we're XYZ. Like, okay, that's nice, but there's a certain amount of community agreement. Even the whole world, I would say, agrees to some extent that Bitcoin is some form of money. And if that fails, will anyone ever put trust in, the next best thing? I'm not sure that they will.
Mm-hmm. That's interesting. So if you can, without getting too technical, just explain how would it work. Let's say I have, Apple stock, right? How do I link that to a, to my through Zen, and how would I be able to transact on that?
So, okay, so what I got to say is, so linking to the Bitcoin is half the part. Let's first, I think, talk about the stock part. So let's say I wanted to write you an option. So I'm going to write you a call on Apple. So what am I going to do? I'm going to take this smart contract and I'm going to say, okay, if Apple trades above 160 within 30 days, then, you're in, and with the conditions that, you paid me my premium and that we predetermine the oracle, basically who's going to determine what the price of Apple is, then, you're entitled to, let's say, the asset price minus the strike price. Okay, let's say a month goes by, and by the way, we only take the hash of this contract. We take its unique identifier number, and we commit to that on the chain. Once we've agreed on that commitment, on that serial number, I'm going to put collateral in that contract. Let's say I'm going to put $100 in that contract. So basically, that if once you pay the premium, you have an upside between, let's say, 160 to 260 on Apple. And at 250, for example, you'd give me a margin call. Okay, so we move on. So I put up the collateral, and then you pay the premium. A month goes by, and within that month, whatever, Apple goes up, and you say, Adam, I want my money, right? I want to get paid. Well, we have two ways of going about it. Either we can each peacefully, just sign a transaction. We each provide our digital signatures, and essentially, I pay you what you deserve. Let's say Apple's at $200, so I owe you like $40, right? So I pay you, $40. Or if we don't both agree to it, what's going to happen is you will take the contract code and you'll run it on the blockchain, and you'll take a piece of data of that person. Let's say we said that Ben will determine the price of Apple. You take Ben's signed data that Apple's at $200, you put it all together, you throw it onto the blockchain, and then my contract will give you $40. That's how it's going to work.
Okay, so you're basically trying to take away the intermediaries, right?
Mm-hmm.
And so do you envision this as a type of exchange, or will this use as, peer-to-peer?
Yeah, the idea here is peer-to-peer finance. So yeah.
Mm-hmm.
No,
So
go ahead.
basically, I can write options for you, and you can write options for me, and we'll go over the entire exchange model.
Yeah, exactly.
Okay, and instead of I'm just explaining, thinking it through and explaining it to people that are not technical, it means there's going to be a smart contract, right?
Mm-hmm.
Which means it's a program basically running on the blockchain, which will verify the transaction without the need for an exchange to to back it up.
Right. So if I may just dive into that point a second, if you look today, exchanges, they serve two principal operations. The one is the matchmaking, and the second is acting as a central counterparty. So basically, the matchmaking we've seen has been disrupted. You have Airbnb, you have Uber, you have things like that that basically say we don't no longer need a matchmaker. While banking has relatively stayed the same. And why is that? Because they're not only a matchmaker, they're also serving another issue, which is a central counterparty. So what I mean by that is, rather than me trust you, right now, today, we don't have a good way to enforce contracts against each other. If you take me to court for not paying my fee on the option, that's going to cost you a lot of money. So you don't do that. Rather, you say, you know what, Adam, let's go both put our money at the bank. And instead of me and you doing business directly, we're going to all do business through the bank, and we trust the bank. And the bank basically will take the position against you and versus me, and me and you aren't actually doing business. And what I'm saying is, if there existed a way for us to enforce contracts against each other with a click of a button, well, then we would never need this bank in the first place to sit there in the middle and take on this counterparty risk. So once you provide that mechanism to instantaneously enforce contractual obligations using this blockchain and smart contracts stuff, then you can basically eliminate the need for a bank in the first place. Does that make sense?
I think so. So how do you think that will change the way people are currently doing trading?
So the way it would change it is the fact that, if you're someone who, let's say, maybe doesn't want to realize for one reason or another, you don't basically want to sell, you don't want to basically trade in the normal markets. Maybe you're someone who has Bitcoins and they don't want to have a capital gains event, so they just want to hedge themselves out in a position without realizing capital gains. Whether you're someone who doesn't have access to the current system because you're in China or Russia and they say, you know what, you can't buy American stocks, or whether you're just some guy who's some genius at home who wants to write his own instruments, but right now he can't because there's no he doesn't have the right connections to create these exotic derivatives. We allow you to trustlessly trade with partners. So yeah, the idea would be is that you no longer need an exchange. That's how it would change, I guess, trading.
But from a a normal trader point of view, a guy that sits at his desks and trade options, for example, how would that physically take place? Assuming he's not a programmer. So how would you do that in practice?
Sure. So I just want to note that our target market isn't for necessarily institutional traders or people who day trade at this point. The target market is for people who just let's say normal individuals who just want to maybe do one trade a month or a few trades a month. It doesn't matter, but they just basically want to hold a portfolio, right? They're more normal people. And the way that they would go about this is they have a wallet, graphic user interface, and you just have you have basically a chart there. There's a graph with all these different stocks, bonds, options, etc. And people who want to create it, they just simply, well, they have like a templates, right? That says, okay, if you want to create a call, insert the strike, insert the maturity, insert just select your parameters, and you just generate the options.
And how would you enter like securities, like something to back up, especially with options? You need to be able to back up your your options.
So everything that I've just described is synthetic. So the collateral is also synthetic. When I'm these are not like covered calls necessarily. These are calls that are covered by cash, right? So they're cash settled at the end of the day, and that's how you do it. You just put up cash collateral, and when the position needs to if the call goes up too much, then the position is gets a margin call.
Mm-hmm. It's interesting. I'm thinking if the exchanges won't try and find a way to stop that, specifically because they're making commissions off of options trading, and they're the data feed providers, right? The price providers.
Mm-hmm. To me, so like I said, it's not going to be competitive with these high frequency traders kind of things. I mean, at the end of the day, it is a blockchain. You have to propagate data. There's certain issues here. We're kind of going after markets that right now they don't have access to. Again, these are people who basically, hold all their wealth in crypto. People who, just can't be customers of a bank right now. These are the people we're going after. They don't really mind. We've met with all the big banks. They're fine with it. They think that it's a great idea, and some of them are even maybe will provide liquidity to the platform. So we'll see.
That's interesting. Let us know when you can make that public, like a cooperation with one of the big banks.
Sure.
Okay. Okay, so can you tell us a bit about yourself and your team?
Sure. We're a team of 7. Personally, I've been in Bitcoin since 2011. We had some other projects doing before me and my partner, basically a bit more speculative philanthropy. And then we said, after we saw everything going on, we said we should really be doing this. This was about a year ago. And yeah, basically it's me and my partner, Nathan. He's a mathematician has his master's from Cambridge. He's a very smart guy who does a lot of things in the crypto space. After that, we've had Ash and Delon come on. Ash is a formal verification engineer. He's doing our contracting language in F-Star. We have Shalon. He's an experienced engineer. He's worked at a bunch of different things. We have Delon, who came on. He was the CTO of Leverate, a company that didn't exit. We had Ilan come on. He had experience working in a bunch of different startups doing marketing and basically helping CoinMamba, the world's biggest Bitcoin credit card, buying Bitcoin with credit card exchange, reach where it's gotten. We have another individual, Eleanor, who's a designer, and we have another individual called Ronen. He's basically helping with the connection to all the financial institutions, and that's basically it.
I see. And I had a follow up on that. Are you? What's your your roadmap? Are you planning an ICO in the future?
Yeah. So we are going to have where we distribute tokens. I hate the word ICO just because it has such a bad connotation. I think even using that word in the first place, I guess it developed that thing because people wanted to promise people, that they're going to make a lot of money. Look, we're IPOing, etc. And that, if people do decide to participate and help us out, it should be coming from a place of, they believe in the project. They believe that this is an important thing to happen because, they want people to have freedom, because they want, to see things like this succeed, not from this thing that they come in to expect and make a lot of money. So that's my take on that. But yes, we are going to have some distribution of tokens. And this will also both, allow people to use the system. We want to get, big financial institutions to have a stake in it so they can easily use the system. Just make sure that also on another note, making sure all the incentives are aligned. So yeah, we're going to have a distribution event later in about a month.
Oh, I see. Okay, so it's tentative date or do you have it
set? I don't want to announce yet anything.
Okay, it's okay. Just make sure to update us when when you know. Okay. So how would that work in terms of okay? So I got how it looks from the client side. What about the other side? Like who's verifying the transactions?
The miners.
If you can explain on that, because I'm not sure everybody that's coming from finance understand how that works.
How mining works?
Yes.
Sure. So basically, in normal institutions, what happens is you pay a fee, and the person you pay a fee to, he basically runs the servers under which your transactions are, executed and settled. In Bitcoin, or in mining in general, basically, you don't have one person processing your transaction. You have a group of people processing your transaction. And the way that you incentivize this group of people to process transactions is by having this mining thing. So what mining is basically is, it says we're going to have this competition, and whoever wins the competition gets the privilege of creating the next series. In the case of Bitcoin, the last 10 minutes of transactions, they update that history of transactions. And part of the incentive to basically do this function is that new coins are created and given to the miner. So essentially, the coins act as a subsidy for transaction fees. Rather than having high transaction fees, you have inflation, and that inflation subsidizes the network in its first years. Yeah, and so this means that you get more security, and it's cheaper relatively to use Bitcoin. Now Bitcoin is in a weird state because of what we talked about earlier with this block size thing, but essentially you could have transactions on Bitcoin being for free, I'd say, or at least just a few pennies, just whatever it is, so it's not worth to spam the network. And that's fine, because miners make a ton of money through mining, through new coins being created. And that's what we're doing here. We're saying, listen, if you want to create a contract, you want contracts, to send money to resolve disputes, basically to send money to different people. Well, then the people that have to agree on the state of the system are the miners, and our miners get paid by creating this new token all the time for themselves.
Exactly. So how do you, if you've already made plans for that, obviously it's not at that stage, but how do you avoid having, the Zen protocol not centralized around a few miners as happened with Bitcoin?
With Bitcoin? So Bitcoin's in a situation, we actually put this on the Bitcoin dev mailing list. Bitcoin's in a situation, the reason it's in this situation is because if the users do not like the fact that the miners who basically run SHA-256, if they don't like they have no choice, right? If they change the mining algo, it's like killing the baby with the bathwater, or however the phrase goes. They're shooting. All the Bitcoin holders are going to be hurting themselves by hurting the miners. So the only way to hurt the miners is for Bitcoin users to hurt themselves. We come at it with a different approach. We're saying it's not a certain set of miners' God-given right to get the inflation of the thing. We don't have to say, okay, the ASICs in China get all the mining. We can say we want half of the block rewards. Half of the blocks will be solved by, let's say, SHA-2, and let's say half of the block rewards will be SHA-2, as in like SHA-256, half by SHA-2, and let's say half by SHA-3. So our target ratio is that every 100 blocks, half will be SHA-2, half will be SHA-3. And then let's say if the SHA-2 miners start misbehaving, and how are they misbehaving? Well, they're becoming over-centralized. Some of them have, failed to sell their hardware in a timely manner to basically sell it to more consumers, right? They only manufacture it for themselves. They partake in this thing called SPV mining. They do all these kind of shtick that they can get away with, maybe. And again, it's nothing against the miners. They're acting in their most rational economic best interest. And that's exactly how Bitcoins operate the design. When everyone acts in their economic best interest, then the system works. It's just that this whole ASIC thing wasn't taken maybe into consideration at the time Bitcoin was created. So what we're saying is, okay, with us, if the miners start, becoming overly centralized, we can say instead of it being half of the blocks found by SHA-2, half the blocks by SHA-3, maybe we say we want 60% of the blocks being found by SHA-3 and only 40% by SHA-2. Now, the mere fact that you can change this ratio without having to basically, blow up the whole thing, without this like mutually assured destruction tension that's currently existing in the Bitcoin space, means that the miners will never reach the point where they take over where there's just basically this hostile takeover of the network. Okay, yeah, go ahead.
But who can make that switch? How do you vote on that?
So the coin holders, basically, people who hold coins can basically say, you know what, we want SHA-3 rather than SHA-2.
So, okay, so it's is it consensus based or majority of coin holders, or?
We have the paper on it. The voting mechanism is it's a bit more complex than I think it can be covered, but because we have all these like mathematical nuances in there, but let's just say that yeah, it's by vote. It's how you would imagine if what would happen if there's a vote. That's what's basically goes on there.
I see. Okay. Okay, I think we covered you know, a lot of aspects that I wanted to cover. What do you think else we need to know about your project?
Yeah, I think that the only thing is to say, you know, the focus, the general goal is to have, you know, a decentralized financial system. That's our goal, to allow everyone to freely do business with each other. No one can, you know, can tell you that this is wrong and that's right. And, you know, basically you're the owner of your own wealth. And, you know, you don't, it's not like today where all your money, right, all your wealth is basically stored with some bank somewhere. It's just some balance in some spreadsheet somewhere. And the vision is that, you know, whether it's us or whether it's, you know, our competitor or something else, that this is something that needs to happen. It's an important thing. And we really hope it does. So that's it. You can find more info about us at zenprotocol.com. And yeah, thank you very much.
Okay, thank you very much, Adam, for taking you know, taking part of your valuable time and coming to talk to us. And thank you all for watching this interview. To see more interviews, follow us at Finance Magnates, and subscribe, of course. Like and subscribe. Goodbye.
Thank you. Bye-bye.